skill. I mean, I think it's best if we show actual analysis working, don't you?
Yeah. Sounds good. That sounds really good.
Okay.
Okay, mate. That sounds good. All right. I've got this. See this?
Yeah. What is that?
It's basically pond water.
Hot water.
Pond.
No. Pond water. Yeah,
Yeah.
it looks a little thick, mate. It looks a little thick.
Yeah, it's effectively pond water. It's spirulina. Have you heard of spirulina?
No, I'm drinking a
It,
little bit of coffee myself.
oh, fair play. All right. I'll quickly have a sip of this, and I'll be back on camera in about 40 seconds.
Yeah, go ahead, mate. I don't want to see you drink some pond water myself. Huh?
Alrighty.
All right, we are about to go live, right?
We are about to go live. Yes.
Yeah, so I'll just let you do your thing for the first 15 minutes, and I'll be right here.
Okay, fantastic. Well, good afternoon, evening, or morning to all of you, wherever you are in the world. I am joined today by Orlando. In fact, I'm joined by I'm a guest presenter today. It's meant to be Paul in, but Paul is otherwise engaged, so it's me and today with you guys and Orlando. Really good to have you in, buddy.
Hey, how are you guys?
Now, what we're going to do is just have a quick look through the Forex calendar, the economic calendar, discuss some of the aspects of that, and then we'll come to you, Orlando, and talk about what you'll be presenting for us today. So let's quickly check the screen here, and I am going to share this here. So this is our economic calendar that we have going on. Oh, we've actually got people in the room, have we?
Yeah, we have.
We've actually got people in the Zoom room. I know we're live on YouTube as well, as far as I'm aware. So let's have a look through and see what we've got. Now, it's been pretty light today on the whole for news. As you can see, there's no red economic data here, which is hello Yao. How are you doing, buddy? Yeah, there's not a lot in the way that would move the market on the data front. We've had a pretty decent move to the upside over the last few days on the promise of a stimulus package, and that's becoming more and more likely. Good afternoon, Piresh. I don't see an attached note. I don't know if Mike can somehow delve into what you mean by that.
Yes, I don't know what he means by that either.
Yes, yeah, I also cannot see a note. Sorry.
Oh, none of us can see the note, Piresh. Not sure what. I don't know if you can attach notes to.
Yeah,
Zoom.
I don't know. What would you attach some note if you can just write it on the chat?
Yeah, it's right on the chat. Anyway, so we've been pretty light, but we've seen a pretty decent move to the upside in equities over the last couple of days. Oh, no problem, buddy. No worries. And it's really because of this stimulus package. You know, we got this stimulus package on offer. Donald Trump came out and tweeted, and I got caught completely hot-footed.
I mean, me too, mate. I mean, that was a terrible 24 hours for me.
Oh, yeah, really bad.
I mean, when I say terrible 24 hours, because I'm just saying that what I thought. What I had on my mind that was going to pan out didn't pan out because of that tweet in particular.
Yes.
But actually, but if you think about it, that tweet actually gave me a buying opportunity on the Nasdaq and in gold.
That's really good. That's really good. I unfortunately was going in the opposite direction. I heard that tweet, so I took it as a selling opportunity, and the markets completely flew after that. The question is really about value, and it also depends about where we are right now. What does it really mean? That particular stimulus package, and will it come? Will it come to fore? I don't know. We'll see. I mean, certainly the expectation now in the market is that with Biden potentially winning the presidential election, the Democrats winning the House and also winning Congress, then it looks like it looks like they could get a clean sweep. And I think people are fairly positive that there will be some stimulus involved in that, and it seems to have boosted the stock market, into a fairly healthy region. None of that is economic data today. It is typical kind of second week slump in when it comes down to data. But what we do have is the RICS house price index balance from United Kingdom, which came at 61%, which is a huge jump. But there are stimulus packages in the UK right now that trying to encourage some house sales. And one of those stimulus packages is a deduction of stamp duty to certain prices on homes, and stamp duty is effectively the tax that people pay when they buy their houses. So that has been taken away, and I think that's going to be here until January. We'll see if there's a new stimulus package for the housing industry after that. But certainly, this house price balance is not. It almost becomes a bit of a lagging indicator. And when you're looking at Forex Factory, it's really useful to kind of note down whether you're looking at a leading or a lagging indicator for making your decisions. And really with this one, it's become a bit of a lagging indicator, because it's a consequence of the government action, and that's how you can tell whether it's lagging or whether it's preceding the potential movement. So so with the RICS, can't really read too much into it, except for certainly the house builders are probably doing okay right now. But if they are doing okay, maybe it becomes a selling opportunity when that particular stimulus package and incentive gets taken away. Current account out of Japan, very good number there with a current account. Now, people always ask, why do people go to the Japanese yen for safety? And this is pretty much the reason. It's because they run a trade surplus. They are one of the countries that run a trade surplus, so they do become a safe haven because of that. And when you look at this is all about the trade balance between exported and imported goods. And you can see, right, this is only going to take us back to 2000 by the looks of things, but look how often they run that trade surplus. Little bit in 2014. Interesting to look at the chart between 2013, November 2013 and May 2014 of the yen, just to see what the price action was doing with the yen at that time while they were running the trade deficit. But generally speaking, Japan is a trade surplus nation, and that's the reason that they do have a safe haven status, if you like. Then we continue to go down. Euro's the same. Sorry, that Germany's the same. It's another country that tends to run a trade surplus, which is why they love the euro so much, because with a depreciated value in the euro, it makes their goods and services highly competitive in the global stage, as a hugely efficient country when it comes down to producing stuff. So again, a miss, but you can see that it's still in positive territory. So they're still running a trade surplus, and not really in expansionary mode. But you can see where prices kind of bubble up and down along here. So really, and with
look at that recovery too.
Yeah, really from the pandemic. So that was June to 2020 when they weren't really doing too much exporting, and I think that's a really good point that you've indicated there, mate. Because when I look at this, what this is suggesting is business as normal in many respects. It's a number that's back in kind of aggregate territory. So if Germany are back to kind of like decent exports, then I think we can safely assume that we are on the road to recovery right now.
That's one of the reasons that I've been looking to get on a long-term buy on the DAX, If you look at Germany's manufacturing PMI numbers, the Germany IFO Business Climate Index, I mean, and the money supply, the M2 money supply, I mean, it's just an amazing recovery from the pandemic crash. I mean, everything points out that it's business as usual in Germany.
Yes, it does, and the DAX has benefited for that, and it's interesting, isn't it? Because we seem to be getting these huge jumps to the downside still on these kind of tweets and these speculative things, but the data that we've had really ever since the huge drop to the downside in some of these equities on the charts, the data's been pretty solid, hasn't it, mate? I mean, we continue to grow.
The data has been pretty solid. Mostly
the question, sorry, the question always is, has the value overshot, with the data a little bit, so is there a little bit of easing that could come back? But it certainly doesn't seem that way right now, anyway. So
what I'm always thinking is that because these numbers are month-over-month percentages, right? We need to be careful about what you just said, because of the numbers that we are coming from because of the pandemic lows. So the actual percentages increases month-over-month can be inflated because of how low the June and July numbers were.
But which is
pretty solid.
Yes, pretty solid, and if we look back to the 1st of October, when we got some of the ISM manufacturing numbers and the non-manufacturing numbers as well, any number over 50 sort of is suggesting that there is expansion, but you're absolutely right, it's all relative. Expansion to the previous from the previous data read, and of course the previous data reads that we've had, there should be expansion from such a low position. So we'll only really know where we're going when things level off a little bit and we get back to some kind of normality. But certainly in some of these data points, there does seem to be a bit of normality. But the disconnect between business expansion and people's jobs is a huge issue, and it's something we've got to stay on top of.
Yes, I agree with you on that one.
And talking of jobs, we've also had some unemployment figures out of Switzerland, which again, pretty good, 3.3%. So Switzerland don't seem to be suffering anywhere near as much as many of the other nations. And if we, bring in the chart here, unemployment rate, yes, it's up in comparison to where it was going in 2019. But back in 2019, we saw an unemployment rate of around about 2%, 2.5%, and now we're around about 3%. So it's a bit of a jump.
Yeah, the jump in unemployment in Switzerland was really not that bad, considering how the jump in unemployment went worldwide. Mostly in the United States. In the United States, what's insane. I mean, those charts are hurt for life. The unemployment claims charts are hurt for life. Yeah,
I completely agree. So Switzerland, anyway, doesn't look in too bad a shape. So anybody looking to short the Swissy, doesn't look like we've got too much reason to be shorting the Swissy here. And the same really with the euro. We've had Bank of England Governor Bailey speaking earlier on, and he was kind of talking about the fact that there is a bit of a disconnect with where the growth is. With some of the companies that are growing, certain parts of the economy growing, certain parts of the economy not keeping up. Now, I didn't look into this, S&B Chairman Jordan, but I'd like to know what he said, because last time there was a lot of talk of the overinflated value of the Swiss franc, and how concerning the overinflated value of the Swiss franc actually is for the Swiss National Bank. And that would suggest that there could be something done. Now, yesterday we had Jerome Powell out and saying that no matter what needs to be done, will be done to make sure that that the US economy can get to that 2% inflation target and people's jobs are protected, which could mean further stimulus, somewhere from the federal, from the central bank in America at some point. That does not go well. That won't go well. Go down well with countries like Switzerland as they try and jostle for being competitive. So it'd be interesting to see who blinks first when it comes down to this stuff, because what we've seen is is a realignment almost, you know, whereas before you might have seen the Swiss National Bank able to keep its interest rates below the US. Now they're getting you know, far more in alignment, which is not good for Switzerland, you know, in the longer term. So as I say, interesting to see who blinks first on that. Natural gas I find a really interesting one. 3:30 we've got natural gas out later on. Natural gas storage. Now we've seen some really interesting moves in natural gas, and I wasn't going to show you
natural gas myself, you know, but
you don't follow it.
No, I haven't.
I wasn't going to bring you any charts because it's really Orlando's section to do that. But I am going to bring you.
No, go ahead, mate. Go ahead, because I mean I'm actually interested.
Yeah, well, it's a really interesting one, I think, with natural gas, because we've seen some. No, look at this on the day on the. Let's just bring up a clean chart here. Look at this on the dailies. In fact, let's look at it on the weekly. And you can see the huge bounce, you know, without any kind of retracement there on the weekly that we've seen with natural gas, and it's got a long way there to go. But we are at a significant level here. You know, it's a fairly significant level. I mean, it's difficult to know exactly where that horizontal line is. It could be down there, it could be there, it could be there, it could be at the top end there.
Yeah.
So it's somewhere in this zone. The question is, can it get through and go, or is this actually a decent selling opportunity? Because we are in a sell zone here. So I think maybe watching those natural gas inventories may well provide a catalyst for us to get some movement. I wouldn't be interested in upside, but if I saw some downside in natural gas after those inventories were released, I may well be interested in taking a trade with that. But we'll see what happens.
Very interesting. Very interesting. I agree with you on that one.
Yeah, I mean, it's not the easiest thing to trade because it is very, very volatile. You know, it's an extremely volatile market, and you can see how it moves. You know, when it moves, it really goes bang up. So really bang up there, little drift, but then a huge move down, huge move up. Now we're drifting a little bit, which does potentially create a selling opportunity.
A little bit like Bitcoin volatility-wise.
Absolutely, yeah, absolutely. And a friend of mine really likes trading these commodities, and he's always long. He likes to go long. He says he can't run out of natural gas, so as long as it doesn't go to zero, I will not lose. He doesn't use leverage. That's his whole strategy. And he's probably right. But I'll be looking at that. But let's bring you in, mate, and just let us know what it is that you're going to be covering. And what the next 40 minutes or so holds for us.
All right. Why don't you? I'll just grab the. Hold on. Let me just open up a chart here. And I'll just go ahead and grab the screen from you. Let's go ahead and let's discuss what I'm looking at, and because right now there's actually a pretty decent opportunity in that I'm currently in, right? So whilst we are here doing this, why don't we just go ahead and do that and look at that opportunity that I'm looking at, you know? Actually, this is a good example of how I look at the market. So why don't we go ahead and grab that chart? I'm gonna go ahead and talk about the pound yen, right? I mean, I really like trading the pound yen. It's one of my favorite pairs to trade just because of how clean the moves are. And if you get on a good risk to reward position on this particular pair, you can get on a pretty good long-term moves, right? So the thing about this, let's go to the 5-hour chart. I'm trying to get short on the pound yen, just because of how strong this move to the downside has been, right? So the first thing that I do is just look at the direction on the market, right? The current direction on the market. And this basically is very clear that we are in a down move, right? just because how strong, I mean, and the way that I see it is just looking at the impulsive moves, right? And right now, the impulsive move is to the downside. When I say that, I just mean that the moves to the downside are much stronger and cleaner than the moves to the upside. The moves to the upside are very choppy, and it's just a pullback, right? So I've been trying to get short on this particular currency pair, right? Just because how this market works, right? I've been trying to get short here because I'm currently a bullish on the Japanese yen, and shorting the pound versus the yen is actually buying yens, right? It's a bullish bet on the yen. And also with the current situation in the UK, right? The uncertainty with Brexit, etc. I'm pretty much short-term bearish on the pound. So this particular market makes for a great trade for both of those biases that I just told you, right? But I mean, you have to time, and I like to time very good. I mean, oh boy, what happened here? I like to time pretty nice my trades, right? That's one of the things. I don't trade too often, but when I do, is because everything lines up. So let's talk about this one, right? I'm short-term bearish on the pound, and currently because of the situation, the uncertainty, the political uncertainty in the United States, right, with the elections coming up, and the overall uncertainty. I mean, the president of the United States just making everybody sick around him. No, I'm just kidding. But the uncertainty in the United States and how dire the employment situation is, I'm a little bit bullish on the midterm on the yen. So this particular market makes for a great trade for those biases, right? Like I just told you. So definitely looking for that one. And next, what I do is just I look for key levels in the market, right? What are key levels in the market? Well, key levels in the market are just levels where price has had some mean reversals in the past, right? The main reason is because the main reason is I like to look, for example, these levels or these mean reversals in historic price action is because of the story that is told by the chart, right? For example, right here, bulls were in complete control of this market, right? Intense move to the upside, and this was a 1,000 pip move to the upside in about 20 days, right? So that's an 8% move to the upside in about 20 days. So that, I mean, in this particular period of time, bulls were in complete control of this market. And what happened here is that there were a lot of sell orders placed at this moment in time, at this level, at this particular level, at this moment in time. And this means that bulls were not able to swipe with those sell orders, right? They kept trying, but sellers kept jumping into the market, and eventually they took control of the market, right? So this tells me that at this particular moment in time, there was a big volume being traded, right? And then, of course, that sellers took control of the market. So what happens is that by looking at this, I know that in the future, this is where big orders are going to be placed, okay? And I'm going to look for trades around those levels. Now, I'm not going to use this particular level because it's too high in price action. But if you get the point, you can actually look for them all around your chart. Okay, so this is the level that's particularly interesting to me. Okay, as you can see right here, again, mean reversal in the market. And this is what I'm talking about right here. You can see that sellers took price all the way to this level, and this is where either they took profit or buyers started to jump into this market, right? So this is a particular interesting level to me, okay? And of course, that you know that levels are not just straight lines on your chart, they're actually zones in your chart. So this is the particular zone that I'm looking for a sell opportunity in this particular market, okay? Now, having said that, price is already here, right? Now, let's go to the 1 hour chart, and price is already here. And as you can see on your screens, we are printing a kind of a double top right here at this level. Of course, that this is not, this is absolutely not enough to take on a trade, but I'm just starting with this chart. I mean, and I'm just guiding you through my thought process on how I see the market and how I look for these zones. And the reason that the reason that I do this day in and day out is because I like to position myself in the market where I can hold that trade for a while. I'm going to show you some examples of that later, but let's continue, because if this makes sense to you, well, actually, if this makes sense to you, this will be absolutely great. So let me just move this to the other side, because I will show you this later. So basically, this is what I'm looking at, okay? And okay, so I got my key level, and then I'm going to look for structure in the market, right? Structure in the market, basically a channel. Price will not always be will not always respect channels, but I like to draw them on my charts because I like to have a visual of the current market structure. All right, so and if the market is not trading in a structured way, I probably won't trade it myself, okay? But this market is currently currently trading in a structured way. As you can see right here, price completely bounced from the bottom of this channel and is right now testing the top of the channel in what seems to be a kind of a bear flag, okay? Now I'm going to change the color on that one because, again, I like to have a clean visual of my charts when I go through them. And as you can see right here, perfect bearish flag that we are trading in right now. So this starts to make more sense to me as a short opportunity in the pound versus the yen, right? Now, another thing that I like to do is just look for the next key levels that I could be taking profit in, right? But before we go there, let me just get rid of this. Another thing that I have to do is just look for some correlations with my key levels and some Fibonacci retracement levels, right? It's just I use that just a kind of a justification of my trade, and we are about that 50% retracement level right here, and this is the thing. All right, I like to when I look for trades, all right, so I start with my my key levels, then I look for market structure, and then I like to look for correlations with Fibonacci retracement levels and extensions, right? Why? Because Fibonacci retracement levels are levels that, in this case, sellers are looking for to get in on that market, and extensions are levels that short-term buyers are looking to get out of that market. So in this particular case, buyers trying to get out of this market would have a bearish reaction in this market. And of course, sellers trying to jump in on a short position is going to have a sell pressure or a bearish pressure in this market. So when you have both levels in correlation with a key level, that makes for a very nice pressure zone, which is why I like to call it. So we're going to be cheating on this one, and we are going to be using a retracement right here. And the levels that I look for are the 261.8, 161.8, and 361.8. Just short term. But this is retracement. So we are going to be looking for those extensions on the first move, right? So we are right there at the 261.8 extension of the first wave up. Okay, I'm not I don't trade Elliott waves, but I mean market moves in waves. So this is the extension or the target of the first wave up. So we are right there at a very interesting zone, in my opinion. Okay, we are at a very interesting zone, in my opinion, of the pound yen. And I mean, everything points out at a good opportunity or a high probability trade for a short position in this particular market. And it really doesn't matter that we faked out of this channel. I mean, I'm not that kind of a trader that when he sees that price fakes out of a channel or a trend line, he needs to redraw it because it's no longer valid. That's not the case, because I don't trade trend lines, right? I just like to put them on my chart because I like to visually have because I look at so many charts, I just like to have a quick visual on where the market is going. So that's why I have my channels in green and my immediate structures in yellow, etc. Just the way that my mind or that my brain processes my work. Yeah, but like I was saying, right here, it's a pretty slam dunk short opportunity for me, right? Just have a look at this, right? We are printing a double top at a previous key level, right? That we broke with, and now we are retesting. Okay, we are at the top of the structure inside of a continuation pattern, which is this flag right here. We have retraced to a Fibonacci level that sellers look for. I mean, and that's the thing, right? I don't trade Fibonacci's. I use them, but I don't trade based on Fibonacci's. I use them because I know that there's a lot of traders out there that trade based on Fibonacci's. So when I have a confluence of a level or of a Fibonacci level that I know sellers are looking for, with a key level that I'm looking for, and a Fibonacci extension that I know buyers are looking at to get out in this case, right? Because we are in a current bullish structure. I mean, that makes for a reason plus a reason plus a reason plus a reason, etc., to take that short.
So Matt, I've got a quick question on that then. So you say you don't trade Fibonacci's. Do you draw them every single time you look at your structure?
Excuse me?
Would you draw a Fibonacci level every single time you do your analysis?
Yeah.
So even though you don't trade them alone, they are used as part of your analysis.
Exactly. That's exactly what I meant. That's exactly what I meant. That when I say that I don't trade Fibonacci's, that I mean I don't trade them alone. I don't trade based on Fibonacci's. I use them on my analysis because I know there's a ton of traders that are looking for those Fibonacci retracements, and if they align with my key levels, well, that makes that makes for a high probability trade, in my opinion, right?
Would you consider taking a trade that didn't have a Fibonacci level there?
Yes, most definitely, most definitely. But I mean, those trades will have a lower probability of success. And I'm not just saying that. I've done the back work and the back testing, and it's I mean, the difference between having a confluence of Fibonacci retracement and extension levels at a key level and not having them on a win rate basis about 17%. So it's kind of a big deal to have that confluence because I mean, increases the probability of success of the trade.
Yeah. There's a couple of questions in the room, mate. I'll let you deal with those when you're ready. Are
there for me?
Yes.
All right. I mean, I can look at the chat right here. So, what if there are two huge reversals? Do we take the most recent one? Yeah. I mean, of course. Okay, I understand your questions. Yeah. For example, right here, this example. Okay. I mean, you can go even further in price action, and you're going to find a reversal at that level. But I mean, don't go too far in price action, because I don't go too far in price action, just because I mean, once a key level has been or price has not respected that key level and has traded all around that, I mean, that key level is just not valid anymore for me, right? The other question: where would you enter your short on the pound yen? Okay, there is an expression in Spanish that is that we say "no comas ansias," which means you should not eat ansias. Let me just Google that. You should not eat cravings. That doesn't make sense in English. Well, that's fine. All right. So, yeah, let's go to the execution of this trade. All right. So we're looking at the forward chart, right? And we've made our analysis, or I made my analysis, and I'm looking at this particular scenario, and I've decided to look for an entry, right? The first thing that I do is I do my analysis, and if it doesn't make any sense, why would I be looking for an execution, right? So I go on the lower time frames. No, that's too low. Let's go to the hourly. Let's have a look. Full transparency, I am already in this trade, but I'll give you my execution. Jairi, am I saying that right? If not, I'm sorry. Okay, so I'll give you my execution. Okay. Right now, okay, so we are looking to short this market. Okay. And what I'm looking for is basically just a break of the current structure. I mean, the correct, let's call it. No, let's not call it the correct, because they're both correct, right? But I will call it the less speculative entry would be to enter at the break of this low, right? That would be, and that was my first that's where I had my first sell order, when price was trading around these levels. This is where I had my first sell order, or my sell stop, with my stops about this high, right? And then price broke with my invalidation level, so that entry was no longer valid. So I started to look for a new one, and the new trade, or the new validation level that I had, was this one right here, at the break of this low right here, with my stop losses all the way up here, right, targeting the bottom of that flag. Hold on, targeting the bottom of that flag for my first targets. Right here. So this is the trade that I'm currently in. It's a little bit, my entry is a little bit more speculative, but I mean, if you look at this, and if you, if I were to wait for the break of these, of the previous low, which is this level right here, okay, I mean, my risk to reward scenario would not be good, right? I wouldn't, I mean, I wouldn't take that trade. And let me be completely clear, I did not move my sell stop above to my current entry just to get a better risk to reward scenario. We don't do that. That's just crazy. I mean, that's just playing with the market or playing with your analysis to get on a trade. And that's not what I do, right? The reason that I moved my stop, my sell stop higher is because of how big this move is. We're talking about 150 pip move for a break of this particular structure, very structured, right? And in my experience, if you have a 150 pip stop, well, if you're waiting for a 150 pip move and you get ticked in, which means that your sell stop gets filled, you're probably going to take water in your trade before it continues to your direction, and if it does, right? That's something that I just don't do. So I look for a better entry, and what I saw is this pretty clean. Let me show you a reversal pattern at the top of this move, right here. Let's clone this right here. So this is a particular reversal pattern that I trade at the top of the moves. At the top, I mean, this is a reversal pattern at the top of the move with a fake out of the structure, etc., etc. So I took that trade. I have two entries going on, one about this level and the other about at around this level. So that gives me a great risk to reward scenario, and of course, it gives me an opportunity to manage my risk better, in the sense that my invalidation level are these highs right here. So my risk is just about 72 pips instead of 150. So that's half of it right there. It doesn't, I mean, and it really doesn't matter if I had entered here or here, my invalidation level would be the same, because if price breaks with these previous highs, I no longer want to be on that trade, because we would be making higher highs. So my short idea would no longer be valid. But like I said before, I mean, this looks pretty slam dunk short to me. And yeah, and basically there you go, a free trade idea by me. I don't know what you guys think about that. If it makes sense to you guys or not, I would be interested in knowing what you think. Actually, you can.
Well, I've got a couple of questions, mate. You talked about this as a reversal pattern.
Yeah.
Are there a basket of patterns that you always look for?
Yes, definitely. I look for rising wedges and decreasing wedges like this. And the reason is because again, what price action says at the moment. Just take a look at this. This is another trade that I took. I took a long here. I'll show you here. I took a long here when price broke with this particular reversal pattern, right? Okay. And the reason that I like I mean, that's another thing that I look for at key levels, right? I need a reversal pattern, because I mean, what I trade is immediate reversals to get in on the longer term trend, right? So I need a reversal pattern to break and the immediate structure to break. And when I'm talking about structure, I'm just talking about the higher, in this case, the lower highs, right? When I'm looking to buy, I need for the previous high to break, or the previous lower high to break, because that makes for a break of the immediate bearish structure. And also, I like what price action tells me at this moment, right? That sellers are just getting tired and tired and tired right here. And when we get that boost or that bullish pressure in the market, and we break with this in this case with the previous high, right, and this reversal pattern, the probability of a bullish continuation, at least short term, is pretty high.
So, when you said earlier you don't trade trend lines, the reason that you define it like that is because you are looking for an upper line and a lower line, so that the upper line on its own is not of interest. You know, the upper, if you just drew a line above to break through, then that would be the break of the trend line. But you're not interested in that. You want an actual lower line as well that you can say, right, we're in a range here.
Yeah. Yes. Exactly. And yeah, I'm not. The reason, I mean, I'm not interested in. I don't trade trend lines, or I'm not interested in trend lines. It's just a visual of the current market structure to me, right?
But the entry that you're talking about, and I suppose it's how you define trend lines. But the entry you're talking about on the lower line there,
yeah,
in a way, is a break of a trend line, because there's a trend line coming down on that particular time frame.
Oh, this one right here.
Yes.
Definitely. Yeah. Okay, I understand your question now. Yeah, I do. I mean, I do trade breakouts of trend lines when we're talking about that the reversal pattern.
Gotcha.
When I say that I don't trend lines, is for example, just
finding the area.
Yeah, blindly taking a short on a retest of this trend line, right?
Yes. Yeah.
That is of no interest to me. I do use it as a whole, as a part of my whole analysis, but no. But yeah, but in any case, that I do trade trend line breakouts in the short term. Exactly.
Okay, mate. And but with that trend line breakout, you do want a lower line as part of that, because you want it to say, like, this is my channel, here's the pattern. And if it breaks through here, it's actually broken through a range.
I don't know, mate.
So you got an upper and lower line. You know, on the breakout there, you've got an upper line to break through, but you got the lower line as well, kind of containing the downside as well.
This one right here.
Yes. So you want those two lines. You wouldn't just trade the break of the trend line there. You want that lower line as well to say this is the pattern it's breaking out, which is a falling wedge.
Yes, exactly. Yeah. Yes. It needs to be structured. Exactly.
Gotcha.
Not just the trend line. It needs to be structured.
Yeah.
Exactly.
Yeah. And I like that, mate.
Yeah. Thank you. And I trade 3 patterns. You have 2 here, and the other one is let me look for an example. Well, if I don't have an example, it's fine. But here are 2 examples of some of reversal patterns that I trade, and why I trade them, right? Yeah. Do we have any questions from the group or on YouTube or on Facebook?
I just had a look on YouTube. I didn't see anything on YouTube.
Yeah, I think we have a couple of questions. Cool stuff.
Okay.
Do you have a name for your strategy? You can call it the Big O strategy. I don't know. No name for that strategy in particular. Yeah, I mean this. Yeah, it's just the way that I trade, mate. I mean, I don't think there's a particular name. I came up with it. You can call it Orlando. But it's nothing out of the ordinary. It's just a very precise set of rules that I need to follow in order to take a trade, right? And that's the thing, mate. That's I mean, that's the reason that I trade the way that I do. Because I need to follow this particular set of rules in order to take a position, right? And like, I mean, actually it's quite interesting because you made me think about this just now. I wasn't going to talk about it, but it's a cool thing, right? Remember that I was telling you that I don't trade Fibonacci's, I don't trade trend line retests, etc. But but they are there for a reason, right? Because it's a particular set of rules that I'm looking for. Okay, and I mean, I don't look them as a particular set of rules, but I look it as a thought process, right? I go to, I mean, for example, I started with a naked chart, right? The first thing that I look for is the key level, all right? I look for a key level, and if price action is not trading around any key level, I just move to the next chart. If price action is trading around a key level, I look for market structure. If the market is not trading in a structured manner, I move to the next chart. If the market is trading in a structured manner, I look for confluences, right, with Fibs. If there's no confluence in Fibs, I don't move to the next chart. But if there is a confluence with Fibs, I will pay a lot of attention to that chart, and I will spend my time with that particular analysis. And it's going to be on my what? On my watch list. Yeah, I mean, and that's just the way that I see the market. And I mean, this is the thing that I love about trading. You know, I mean, no one is going to see exactly the market. I mean, no one's going to see the market exactly the way that you do. And sometimes people, I mean, and sometimes people are just, I mean, what I do is not going to make sense to them, right? Like, to me, it really doesn't make sense the way that some people trade, but it's completely fine if it makes sense to you. And if it works for you, you should stick with that one. So let's grab another example. Yeah, I'll show you some cool stuff too. So we were talking about that, about yesterday's tweet. Was yesterday or the day before? Yeah, the day was this pull up right here from Donald Trump's tweet, right? So this is the NASDAQ, guys. Let me just get rid of this. All right. So this is the NASDAQ, and yeah. Oh, here's a couple of examples of a couple of trades that I took a couple of weeks ago on the NASDAQ. This short right here, again, pretty slam dunk on my strategy, and this one right here. I mean, and this is the thing about trading. It's always the same thing, and don't get desperate if you don't have a trade at the moment. I mean, having no trades is also a position, you know. But this is, I mean, this is a massive level that we're trading right now. And what I liked about the Nasdaq, I'm long on the Nasdaq from this level, and I just added right here. I think. Let me see. Yep, exactly that. Now, why did I do that? Okay, I mean, this buy is pretty much self-explanatory. We had a breakout and a retest right here. I think I entered, and still holding a little bit on that one for a long-term trade, right? And I was looking to add on this position, and I missed this one and this one. Actually, this was not a tradable setup for me. But if you look at the Nasdaq, I mean, it's a pretty much a ping pong between buyers and sellers at the moment. Ping pong between buyers and the sellers. I mean, even though I'm long term bullish in the Nasdaq in particular, I mean, if I get a sell setup like this one for a short-term trade, I will take it, right? But for long-term, right, it's the same thing, but always with key levels. And as you can see, and this is the thing that I like about equities, mostly U.S. equities, because the DAX does not care about key levels. Let me tell you that. I mean, the DAX is another beast. But yeah. Yeah, U.S. equities, particularly the Nasdaq and the S&P, if you are patient enough for price to hit your key levels, you are going to get some pretty damn good risk to reward scenarios, right? And yesterday's Trump, or the day before, I don't remember, Trump tweet about not about ending um, the negotiations on the stimulus package. Of course, that had a bearish reaction in the market, but I saw that as a buying opportunity when I saw price just stop at this key level right here. So at the open, I took a buy, and I mean, it has been just riding up, riding up. Right now, we are testing the previous highs right here and this key level too. And if I go even further, I mean, if I zoom out, hold on. Yep, if I zoom out, you're going to see that this particular key level goes all the way to these lows. And I'm sorry. Yeah, I'm sorry about that. It goes to these lows. So this is pretty much the make it or break it level for me in the Nasdaq. And well, if you are looking to get a buy on the Nasdaq, I would definitely advise that you wait for the price to break and retest this level, and wait for a clean rejection of this level before you buy into that move.
So
and the reason
can I ask a question, mate? The move that we had a couple of days ago from the tweets provided that downside. Now, we've just been talking about breaking through patterns. Is there a pattern that you were looking at when it broke down there, or was that one of those incidents that you just you like the price?
Yeah, it was just. I mean, it was just an instant that I liked the price where it was trading at. I mean, that was yeah. That I didn't have a clean. I mean, a particular pattern in that entry, but I'll show you how I entered that trade. At the moment, at the moment that I saw price, actually, I'll just use the replay. That's a pretty cool feature here. Price was trading at right here. This is this is what price was doing at the moment that I saw that, right? And I just put my buy stops. I think above these highs or something in the vicinity, right? With my stops pretty much below this low, right? So, I mean. And the reason that I put my stops below this low is because I wanted to give my trade some breathing room, because I was not trading a pattern breakout, right? But I was trading a very, very important key level. And just visually, because price did not quite get there, I mean, the probability for a final leg down was there. And if I put, I mean, and I didn't want to lose money on a retest of that level before price, I mean, eventually got to my direction. So I put my stops all the way below this low. That's the reason. But I used I mean, I didn't enter at market. I used a buy stop because I needed that high to break. And yeah, and eventually that's what it did.
Yeah. Yeah, and it's looking pretty good, isn't it? I mean, I wonder whether we might even get another break to the upside today.
Yeah, definitely. I mean,
cool.
For example, yeah, right now we are. I mean, we could be looking at this particular pattern as a flag, but the reason that I wouldn't take a breakout trade at this on this particular flag, and actually it looks a very slam dunk flag pattern to me, but because we are so damn close to that level.
Yeah. That's the problem, isn't it? So where you would be taking that pattern at the in the buy area, this is actually a sell zone, isn't it? And that's the issue.
Yeah, exactly. So we would be actually taking a buy into a sell zone. Yeah. So in this particular case, I will wait for a breakout and a retest and a pattern to create in some way for me to be able to put a buy stop and a defined stop loss. And that's the reason that I like to trade patterns, because I have a visual defined risk.
I think it's great, man, because really with the formation of the pattern, and really for the guys in the room, if you consider what makes a pattern, it's when price gets back into, or trade gets back into balance. And we want to be looking for those area of balance, because that's that balance precedes explosion. We don't want to take the explosive, get involved in the explosive aspects of it. We want to take it when it's in balance, and that's what those patterns create. Just a kind of tight range where buyers and sellers are, they're battling it out at that point, and you're going to get a break at some point.
Yeah, definitely.
Yeah, cool.
I was just looking at this move from the tweet, right? I mean, buyers that, there's a lot of strategies out there, day trading and scalping strategies for U.S. equities that buy into the daily opens breaks, right? Those strategies just got slaughtered this day.
Yes, they did. I have to say I got slaughtered when it came. So it came up about halfway, and I was selling. You see the low of that there, down the
where
the very low, the lowest point that it had to. There. But the closing price, price. So I was looking in there for a short. I thought we might be in retracement mode as it came back up, but that short got swallowed up pretty quickly, and we continue to the upside. And as I say, we might well get a break today.
Yeah, definitely. So that's just the way that I look at the market. And just looking at the Nasdaq, mate, like you just said, it continued to grind up. It continues to grind up. And it's going to be pretty interesting session today because of where we are trading at the moment. We're trading right there, retesting these highs, retesting these lows, that key level. And if price breaks above it, we could get just a quick dip to that level before we continue to the upside. And that's the thing about it. That's the thing about trading equities, that sometimes when and in this particular case, that we are waiting for that break and retest, a pattern is not going to be formed at the bottom to get a defined risk to reward ratio. It's going to be the probability of it being just a it's pretty high. So I'm going to stay awake throughout the session, just to wait for that, because of the sheer potential that we have to the upside. If we look at this with key levels, the only level that I see some problem with is this one right here, around the 11,922, let's call it the 11,922. That's fine. Just take a look at this heavy zone right here. I would definitely take some profits here, but again, even though I'm bullish and looking for a long-term position in the Nasdaq, I hate deep retracements, mate. I hate deep retracement. And that's the thing, right? It just screws with my mind to have a deep retracement, and that's the other thing about trading. You are going to have to learn how your mind works and how to be comfortable with your open positions, right? I am not comfortable with not taking profits and having deep retracements. I'm not comfortable with it. That's why.
I think that's absolutely right. And this is back to the importance of making sure that you journal, your trades correctly, so you can analyze what works and what doesn't work. Ultimately, people, I think, continuously try and use their memory. Well, this happened before. Unless you can back it up with data, you can't say anything for sure.
No.
So you know, the journal is so important.
So important. The journal is so important because I mean, from memory, you're just going to remember your big losses and your big wins.
Yeah.
That's
not
it.
those little itty bitty things that you got wrong. I completely agree. That's fantastic. Anything else that you want to do? You said there was a few things that you were talking about.
I mean, I think
we talking about MT4.
Everything.
Was there an MT4? Or
yeah,
when you talking?
I just wanted to show. I mean, for example, I just wanted to show that. I mean, how these particular trades that I'm talking about work on real time, right? For example, this is the Nasdaq, the trade that we were talking about. And hold on, let me just get rid of this because I'm going to open my terminal. Hold on, and my account history for yesterday, I made $50. Because I want to show you. Well, it's fine. I'm not going to show you that. But I mean, I was talking about taking profits, right? And why I'm particularly I am not comfortable with deep retracement. Now, for example, I took this long position here, right? And I took profits right here at this level, or more than half of my position. I would like to say about 75% of my position right here. Why? Because of how big this level is right here. Okay. For example, because of how deep, how important this level is, and because of the uncertainty when it comes to this level, right? We cannot know for sure if buyers are going to swipe the sell orders that are placed at around this level, or if sellers are going to take control of this market and push price back down. Remember, we are in a ping pong match between buyers and sellers in this particular range, right? So when we go to the top, when I get to the top of the range, I'm definitely going to take a lot of my profits here because I don't know if we're going to retrace back to my entry and just erase hate on. And I mean, it doesn't happen to me anymore, but when it used to happen, I traded horribly for the next couple of days, you know, and I'm talking about years ago, you know. But I mean, I got to know myself on how I'm comfortable with my open positions and my trading. And I mean, this is just the way that I do. I took around 75% of my position here. And if it comes back and this little bit of position stops me out at break even, I'm completely fine with having erased these open profits, right? But I would never be comfortable with erasing the full trade's open profit, because, you know, trading is hard enough and making money trading is hard enough that I mean, when you got some profits in the table and you leave them there and they're just erased by price action, I mean, that just hurts, and it can screw with your mindset, and it will if you don't follow a set of rules, which I've already talked about. Now, yeah, I mean, for example, another example is this one right here. I have this buying gold, and I'm going to be completely honest with you. This is my second buy in gold. I bought into gold right here at the break of this pattern, and I did not take profit here, and I got stopped out on a profit around this level. The reason that I did not take profit here is because my TP was on that particular piece of the trade was a few pips above, and it happened during my off time, right? So that's another thing that you should definitely be doing. Don't be greedy with your TPs. I mean, it's better to take profits, right? A few pips below your zone than not taking profits at all. And I was not greedy on this one, right, on this trade right here. I mean, price just didn't get to my zone, and that's fine. I re-entered, and as you can see, because of how price is trading at the moment, I'm not really a fan of how price is trading at the moment, but I'm definitely looking at this particular level right here, right? Another key level, and this is, I mean, this is the 50-minute chart, but key levels are key levels, right? I mean, this key level in particular is not going to be a key level in a few days, right? But if you are day trading, you can definitely use mean reversals in historic price action, like I'm doing right here. And I move my stops above, below these lows, just because of how price action is trading at the moment. I'm not a fan, but if we're looking at patterns right here, if we're looking at patterns, this, I mean, this particular pattern is looking pretty good as a continuation, right? As a continuation pattern. We have a break, a break of these highs, a break of this range, and a retest of this previous zone. And if you're looking, I mean, let's just thicken this chart out right here. And yeah, and if you are, I mean, if you look here, what price action is telling you with these wicks, and again, this is the 50-minute chart, but it's, I mean, but price action is price action, right? That buyers are placed here, buy orders are placed here, buyers are jumping in at this level at the 1890. Yeah, around the 1890 level. This is where immediate buyers are jumping in. This is the level that buyers are protecting. So if sellers manage to break with this level, that would mean that sellers would swipe all the buy orders that are in place here, which are pretty thick, and we can actually go ahead and have a look at the futures market. Why don't we do that actually? Yep. And let's look at the volume profile on that particular level. That's another thing that I use, volume profile, which I'll show you. So GC, so gold futures, we're going to look at the continuous contract, and we're going to look at the 50-minute chart. So we're going to look at two different volume profiles, right? Let's start with the session volume. And yeah, I mean, this is the session volume. If you don't know what the volume profile, very quickly, what the volume profile does is just plots the volume in this histogram. And it's different from the normal volume that you have at the bottom of your charts, because the volume at the bottom of your charts tells you the volume of a particular candle. This, the volume profile tells you the volume at a particular price level, which is more important, right? And the red thing here, the red line is the point of control. The point of control is the level, the exact level that has had the most volume traded in this session right here. So we are trading at the point of control, which, I mean, it's completely logical. Hold on, let me go on a fixed range, because I want to look at the volume profile of just this right here. And if we're going to do that, let's go to the 3-minute chart, right? Okay, so I'm looking at the volume profile on just this range. And I mean, we can even get the amount of contracts being, the amount of contracts being traded, show values, yep, and in white. So pretty thick level, and the point of control, and as you can see, we are getting rejected right there at the point of control. And the lower we get and the lower we go, the less volume is being traded, right? But there's a particular high volume zone right here, which is the zone that that I was telling you that buyers are protecting. And if you look at the point of control, the most volume traded at this particular level is buying volume. So so what this tells me is that buyers are still trying to push this market higher, but if we break below these lows, just because of how this just look at this. If we break below these lows, there's absolutely no volume being traded here, and that's why we got these big moves to the upside. Why? Because of how low the volume was at that level, right? The less sell orders are in place at a particular level, the the faster buyers are going to swipe with those orders, or big buyers, right? When you get into ranges and the choppy price action, normally it's because there's a lot of volume being traded, not because there's no volume being traded. But yeah, I mean, if like I told you, if we move below the, whoa, that's a good thing for me, right? If we move below this volume, and we're not seeing that right here on the GC or the gold futures contract, because my data is delayed by 10 minutes. All right, which is fine, because I don't trade based on volume. I just like to look at it. But again, yeah, I mean, having said everything that I said, it was pretty obvious that this is the level that was the make it or break it for my particular trade, right? Yeah.
Let's wrap it up, mate. I think, are you pretty much done? You all right to wrap it up here?
No, I'm pretty much done, mate. This is what I do.
Fantastic. Well, thanks so much, mate. It was a really good insight into what you do, and thanks so much as well for introducing that volume profile. So you can get this stuff on TradingView. I think you have to have a subscription for it. It's an extra tool that you can have, and if you're going to trade Orlando's way, then you will need that subscription. Thank you, Alan. Thank you very much. Okay, so we're going to wrap it up here because we got another show starting in the next 15 minutes. So I will be on that show. I'm looking to trade natural gas short, and looks like I've got a potential order to put in the market at 253. It's going to be. So if you guys are interested in that, I will see you in the preceding show to the US show in 15 minutes. Thank you so much, Orlando. It was really, really insightful, buddy. Thanks, man. All right, guys. See you in a bit.